And with just a few hours left before the October 20 tax deadline, the South African Revenue Service has issued a final warning to taxpayers who have not yet filed their returns. SARS is urging all non-provisional taxpayers to submit their income tax returns by the 20th of October 2025 or face penalties and interest charges for non-compliance. The Revenue Service said it has already received more than 7.9 million submissions, representing nearly 80% of taxpayers, but warns that over 850,000 people are still outstanding. To help us understand what last-minute filers need to know and what happens if you miss the cutoff, we're joined by Luncedo Mtwentwe, Managing Director of Vintage Advisory. Let's start the conversation here. What are the penalties and how severe can they get for non-compliance?
Yeah, thank you for having us. Yeah, look, one, I think we need to understand that SARS has really come out to remind South Africans in terms of the looming deadline on the 20th of October 2025 in relation to the non-provisional taxpayers. So it's very important that this is not all applicable to all the taxpayers, but only non-provisional taxpayers. Then maybe we'll get into in terms of who are the non-provisional taxpayers. But in terms of the penalties that SARS will be levying for anyone who is not submitting their tax returns by the deadline of the 20th of October, we are starting at 250 rands per month just for the lack of submission. And therefore, depending on the income that an individual has generated for that particular financial year, of which we are talking about 1 March 2024 up until February 2025. So the higher you earn, the higher your tax penalty actually comes in. So in principle, it's 250 rands. It can reach up to 16,000 rands per month if you are not submitting. And therefore, from that penalty, there's still an interest that can be levied of about 7% in relation to that. So it's very important that the non-provisional taxpayer that have not yet filed or have not yet been auto-assessed, actually by the deadline of the 20th, they log into their e-filing and really submit those IRP and those tax returns that are due in relation to SARS.
Does this deadline of the 20th of October include the deadline for the submission of disputes?
Yeah, so I think what is important is for first people to understand that the tax season did open, of course, from July up until the 20th of October that we're heading to. So the taxpayers had the period to really review in terms of those IRP5, that information that their employers have submitted to SARS. They've had that opportunity as well to submit. They've had the opportunity to go back to the employers and say, my IRP5, I don't agree with an income that is already there. Or they would have gone further as well to some of the third-party entities that they do, or they've got, for instance, like medical aid contributions or retirement annuity contributions. You have gone to those parties that are handling those to say, listen, my contributions to you are not yet reflecting in terms of what SARS had. So in relation to this particular period, yes, that includes all of that. Any dispute then that you need to do after, therefore, there's a chances, of course, that they can come up with penalties. Unless it is something, of course, that is beyond your control or certain employers have delayed you, then you do have then a case, of course, to provide to SARS so that there are no interest or penalties that are actually levied against you. Then you can apply for that remission of interest and penalties.
Let's talk about non-provisional taxpayers. What category of taxpayers are these?
Yeah. So in South Africa, we have two types of taxpayers. We've got a provisional taxpayer, that is someone who submits their tax returns twice a year or 3 times a year, by August and January and February. Those are the provisional taxpayers. When we are talking about non-provisional taxpayers, we're talking about individuals who generate an income in form of a salary. So anyone who is employed most of the time and only via salary, you become what we call a non-provisional taxpayer. And therefore, those are the people that mainly right now, you would have seen most of the people below 500,000 rands income they've generated. Those ones would have been auto-assessed for most of the time, unless there's an additional income that you are generating on top of the salary that you get. Therefore, you need to declare that, of course, to SARS. But mainly what we're talking about now is usually the most of people that are sitting at over 500,000 rands, and it goes further depending on the income that they are getting from their employers. So this only applicable for those non-provisional taxpayers. Provisional taxpayers, their deadline has passed, which was August. Then the next one is coming in January and in February. So those are the people that are fully employed. Those are the people that we're talking about. But as you have said earlier on, we're only talking about 854,000 taxpayers here that still need to go and submit their tax returns. The rest have been auto-assessed. The rest have also submitted their tax returns. So those 854,000 taxpayers in South Africa who earn a salary, those are the people that SARS is talking to.
Yeah. How important is it for employees who taxes are paid over by their employers to check that what is reflected on their salary advice is indeed what has been paid over to SARS, and that they aren't faced with surprises later on, and that, of course, along with other statutory deductions and payments?
Absolutely. So that's why most of the taxpayers or the employees, rule number one is you have to get a payslip every month, right? And you have to review that payslip indeed, that it does agree to the amount that you have signed off, right? So you don't only check your IRP5 at the end of the financial year, right? If the employer has paid over that PAYE, pay as you earn, right? You can confirm that, of course, with your employer, but it's the responsibility of the employer to pay PAYE over to SARS. Therefore, as I said, the past 3 months, most of the employees would have received their RP5. So the starting point, before you go to e-filing tomorrow or today, is to ensure that you do have your RP5 and ensure what is already populated on SARS e-filing agrees indeed. But also it has to agree with the contract. It has to agree with what you have signed off. Because the moment that doesn't agree, then you have a situation where either you can be underpaid, or you would have underpaid tax, or you would have been taxed more. So it is the responsibility of each and every taxpayer that every month you do reconcile that. And again, to avoid a situation where you're paying higher taxes as well, but it's important that all the contributions that you would have made in the form of deductions, which is your medical aid, retirement, annuity, contributions, home office expenses. We've got home office expenses. Again, you have to include that in terms of your submission so that it can reduce your taxable income that you should be paying over to SARS.
Yeah, we're going to have to leave it there. Thank you so much for your time and your insights, Luncedo. Really do appreciate it. Luncedo Mtwentwe there from Vantage Advisory.